Welcome everyone. It's Nicole with Wedding Venue Map today for our monthly Lunch and Learn, where we love to bring in amazing educators from all over the country. We know that sometimes it's hard for everybody to take the time and step away from the office, go to education, or sometimes even travel to conferences. So we love to bring this education right to you. So, whether you're here watching with us live or catching this on the replay, I'm so excited to welcome Matt Radicelli today. He is an executive coach and entrepreneur who has spent more than 35 years in the wedding and event industry. After selling his largest companies, he launched MentorPods, a group coaching platform designed to help business owners grow with structure, accountability, and real world strategy. He has a rare 50-50 blend of creative and analytical thinking. Matt brings both heart and strategy to the table. Today, he's here to walk us through Profit and Progress, your end of year business playbook, where you'll learn how to review this year's performance, build a realistic budget and sales plan for next year. So, with that, I'm here to welcome Matt. Take it away.
Thank you very much, Nicole. I appreciate it. And Wedding Venue Matt, thank you so much for having me out. This is a great thing that you do on a monthly basis, and I think it's great. So I'm just going to tell you, if you are with us today or you're watching this recording later on, this is a format that is a little bit foreign to me because in Mentor Pods on a weekly basis, we take 18 to 24 people and we have them live in a Zoom call so I can see and feel your experience for what's happening. So when we talk about a concept or we're teaching you something new, I can see on your face whether you get it, whether you understand it, or whether you're confused. So today, I'm going to ask you, if you're with us live today, that you use the chat a lot because I'd love to know if you have a question, put it in the chat. I'd love to know if you have a comment, put it in the chat. If I'm asking you for some feedback, please use the chat because it is important for the way that we teach things. Okay, so how it is that we do things like this in Mentor Pods, we strive to teach you these little nuggets throughout the entire year, one lesson or one week at a time. What we're doing today is this topic is all about maximizing your productivity in the months really of November and December in order to get to a place where you know that you're setting yourself up for success in 2026 or every future year whenever you do that. So we're going to talk about a lot of these things and strategies, and there's no way, literally, there's zero chance that you can do all the things that we're going to talk about today. You can't do it. What I'm going to challenge you to do is to let yourself enjoy the presentation, consider a little bit of edutainment, if you will. And your goal is to walk away with one thing that you decide to implement, all right? Or to talk to your team, your leadership team. Even if you're a team of one, work on it with yourself, reach out to us. We'll be happy to assist. I'm going to put my contact information here in the chat here for you, so it's there. And I would love it if you would tell us and I know you already put sort of that you're from Orlando. I see Orlando. And Kristen, where are you from? Did you already answer that side of it? Didn't see that yet. I would love to know if you're also from Orlando or not inside the chat. Please let us know. Okay, wait, now we've got that down. Let's go ahead and jump in, and we're going to do approximately 35 to 45 minutes of presentation material, and then we're going to do as long as you need for Q&A, right? We're going to do Q&A to answer whatever questions that you've got. Awesome. So you guys are all from Orlando. Nicole and I were just chatting about how you guys don't have to deal with snow like us up here in Cleveland, so good for you guys. And as I said, you guys just have to deal with lizards falling out of trees, which is very, very unique. Okay, there's a QR code that's going to be on the screen, and we're going to give you a whole bunch of stuff. And I'm telling you now, I move really quickly. So the fact that I can't see your faces is going to be another reason overall that we may just have a situation where there's a thing that you might have a question about, and I've already gone on. The link inside the chat is the same way to get to that QR code. Basically, it's just a funnel. I'm going to ask for your first name, last name, your email address, and your phone number, and you're going to have access to the entire download kit from today's presentation. There is one thing that is not in that kit yet, and that is that the slides from today's presentation will be put in there 5 minutes after we are done because I modify the slides right after I end the call. Just in case you had a question, I might add an extra chart or graph or a little bit of information for you just to be helpful. Okay? All right, so I'm assuming that you got that QR code or you can hit it in the chat. Those that are watching this replay in the future, see the chat and you'll be able to see it there, and it'll also be in the link in description of the Lunch and Learn itself. All right, our quote for today: don't put off until tomorrow what you can do today. This is my friendly way to say, once again, although I know that you're going to have a ton of things you're going to want to take away from this lesson, and most of it is business related, I'm throwing a little bit of personal stuff here at the end because I think that that's what everybody needs, right? We need the business that is in our life, whether it's the business we own or the business that we work for. We need it to serve our needs, not the other way around. So remember that everything we're doing within business is designed to support our needs and not the other way around. So when we're talking about the things we're supposed to do in the final approach of December, It's so that we can actually have a better 2026. All right. So I'm going to lean in. I would love to see in the chat. All right. For those of you that are with us, tell us, do you already have an end of year checklist? All right. Can you just brainstorm for me in the chat? Tell me what it is that you do at the end of the year naturally. Do you have a system for it? Do you actually have a checklist that your accountant gave you? Are you a systems person and you have a giant calendar that said in December I'm supposed to do a thing? Go to the chat right now and tell me. What is it that you do naturally or with a system at the end of the year? Go for it. All right, so what we see frequently coming from small business owners and large businesses, and small business usually lives somewhere in the range of, I just started my business and quit my full-time job, all the way up to a few $1 million. Big business is a different story, but the thing that they all have in common is that they really review financials and set up time to talk to their CPA and their accounting team in order to make sure that things are in order. All right, so we've got some comments now. Getting the books in order, review legal, debrief on the year. Those are fantastic. Melody, thank you very much. Isabel, all contractor and tax info. Yes, this is super important. We're going to go over this, and I'm going to say it now just because we're going to go deeper later. Doing all the hard work in December and making sure that it's done before the end of the year saves you a whole bunch of headache in the future year. Maybe we're not sending it to the wrong address. Maybe we've got the detailed information wrong, etc. It also saves us a ton of money. So those are very important things. I would say that they are even at the top of the list, as it were. So thank you very much for the feedback. All right, some other things that we see that are on the list. We talk about overall having goals that we set in terms of internal and external budgeting and setting sales targets for the future year. Those things go hand in hand. We're going to talk about that as well. Kristen says, I start to wrap up existing projects and make decisions on any new things you want to implement. Absolutely. So let's nickname that strategic planning. Today's session's not about that. However, it leans into it quite a bit, deciding what did we do, how did things go, where are we planning to get by the end of the following year. All right, so a little overview of what we're going to be doing today. We're going to talk about year-end financial reviews. All right, we're going to do a little bit of a deep dive on that. And really what I'm going to do, whether you've been part of it or you're a pro, is I'm going to explain the basis of the steps. Why would I do that if you have a CPA? Why would I do it if you have an accountant? Well, plainly said, for the hundreds of people we work with, not everybody's CPA or accountant is really as good as they want them to be. They have to do a little bit of hand-holding. Thankfully, language models and ChatGPT and other services can get you closer, but we're going to give you a little bit of a checklist that you can go down to work with your CPA on. Second thing is to talk about your 2026 budget. So budget means revenue and expenses. It just doesn't mean, you make some envelopes, put some cash in it, and decide what to spend on groceries. We're going to talk about both sides of the budget. That leads into your 2026 sales plan. What does your revenue look like? Where's it going to come from? Do you have different SBUs? Right? So I see that Isabel, you said that we do dancers, actors, and entertainment. Well, I would hopefully like to see that you have different categories of what that revenue looks like with different customer types. And when we're doing our planning for the future year, we're going to take that information and say, well, we're going to do $35,000 in this type of actor. We're going to do $17,000 in this type of dancer. And we're really going to double down and do Google ads on this thing over here in order to generate X, Y, or Z. I want you to get that granular. We're going to talk about that. Personal and business tax strategies. I do not pretend in any way in the things that we do as business consultants to be a CPA. I do, however, know that the information is publicly available and I can share with you what most of our customers do and what we recommend in order for you to be super successful and lower your tax rates, period. So we're going to talk about that. We're going to talk about additional action plans for success. And I put two more bonus sections because of the amount of time that you guys have for your lunch and learns. I put two more bonus sections at the end if we have time for it. And no matter what, it's all going to be in the slide deck. Okay. So again, I'm warning you now, if you haven't seen me on stage or we haven't worked together before, I move really quickly. And all you need to do is put the breaks in the chat and ask a question, which I'll be watching with you guys, and we'll continue. All right. Okay. First section, the year-end financial review. We're going to talk about sort of the why and the how and the what for each one of these topics. So what we want to do is we want to do some sort of strategic planning retreat. This is either going to be with your team or by yourself. And I want you to review the key metrics having to do with your year in your business. What worked, what didn't work. And I want you to talk about refocusing on what it is that you want to accomplish after doing what we call an after action review. After action review is saying what were our intended results, what actually happened versus what did we expect to happen, and what are we going to change differently. right? So if you can answer in the chat, and if you're watching this recording, think about this now. What financials do you track, and how often do you track them? Answer that in the chat for me, please. What financials do you pay attention to, and how often do you look at them? So the question on the screen is, what financials do you track or review at the end of the year? I'm asking you guys what you look at and how often you look at them. I hope you look at them at the end of the year, right? Profit and loss, yes. Hope we're looking at that. Anybody else have an answer for us? Most commonly, we're going to hear answers like we look in our CRM and we look to see what our sales are doing. Profit and loss statement, hopefully out of our accounting software, QuickBooks, Xero, FreshBooks, etc. If you're a bigger business, you maybe use something proprietary. All I want to know is, do you have your numbers in front of you? I love that answer, Melody, about marketing and ROI. It's something that many people think is a mystery, like it's a unicorn. To truly understand what marketing is working and what it's not a mystery, right? Cool. You look at that stuff monthly. That's a great frequency on that. Okay, let's look at this financial review and we'll circle back to marketing. So what I want you to do in the headlines is I want you to be aware of your revenue and where it came from. I hinted at this a few minutes ago about knowing that you can look at your CRM or your ERP or your system and say, we did $500,000 last year. And you could say, I'm happy with that because my goal was 450. I did 500. It's good. It's not good enough for me. It's not good enough for how it is that we teach and what we want you to do in order to succeed. We want you to say, I intentionally went after this market and the goal was to do 300 and we did 325. I intentionally went after market two. We were going to do 180, but we fell short. We were only, went down to 100. We need to know where the revenue came from over the course of the last year, if not the last couple of years. Thank you very much for putting this information in the chat, guys. You guys are doing great, and that helps me a lot to know how deep to go. Next thing is when it comes to your expenses, when you do your year-end review, what happened? And I know that I'm boiling this down to such simple stuff. You might be rolling your eyes and going, but I'm literally saying I want you to look at this when you run the report in a monthly or quarterly basis. What are the outliers? What did you expect to spend versus what actually happened? For you, it might have been that your insurance mid-year, your renewal might have been in the middle of the summer, and you had a 28% increase, and it lowered your total profitability by 4 or 5% for the year. It's a really big deal. You might also have seen a major increase because two of your best people left you and you had to hire contractors, or you decided because somebody left you to pay more than you ever have to the next person because you were scared of what was going to happen. These things all directly affect what your expenses look like. And just because we might look at it, and this is why I asked the question, weekly or monthly, doesn't mean that we draw the same conclusions at the end of the year. And that's why we want you to look at it really deeply. So, profit, did it match what your goals were going to be? So every business has a different target of what they want their net profit to be. And we're not going to dive in too much today about the difference between what your take home is and your distributions and everything else. But the net profit of a business after owner pay in general, in the healthy range is between 8 to 18%. And we're targeting best in class somewhere in the 20s. And I understand that venues, specifically for anybody watching the video in the future, you're going to be in a situation where your gross margin is going to vary drastically depending on whether you are a property only and rental company or whether you're also offering catering on site and you're in control of that. That in itself is going to be about a 20% swing in gross profit, but your net margin or net profit margin is usually going to be pretty similar. Being aware of whether your profit, getting back to it, matches what it is that you set the goal as. So for those of you with us live today, at the beginning of the year, I hope you said, this year, in order for this to be worth it for me, we are going to make X, Y, or Z. Or as a company, we're going to make $10 million and we're going to be best in class and we're going to have an 18% EBITDA. Therefore, we're going to profit $1.8 million. So, can you tell me inside the chat, did you meet or exceed your goals or did you fall short of them? And I'm talking about profit right now. If you know, put it in the chat. If you don't know, just say, I don't know. And that way I'll just be aware of what's happening. Did you match your goals for this year when it comes to profit? Please let me know inside the chat. Melody says we fell short. We're going to see what the other answers come through. Take a look at the screen. Some of you despise spreadsheets. Spreadsheets make some of you very, very uncomfortable, and you'd rather look at a chart, or maybe you'd rather just avoid the whole conversation and put your head in the sand. This is just a simple chart that would show an example of revenue from a venue, Northeast Ohio, moving through the different months of seasonality. As you can see, things get better when it's warmer. It's actually inverse to what most of you might have in Florida, etc. I just want you to see exactly what it is that you're targeting and where you want to be so you can have a conversation about it. I also want you to spot trending and outliers, which we're going to talk about here just in a little bit. But I encourage you, if you haven't done it, to use any sort of model to do some charting with you and for you. It can really change the perspective, what it is that you are building. Okay, next thing, your 2026 budget. Okay, budgeting is not a bad word. We should be starting our budgeting in about mid-October. So one of your takeaways for today, if you've got a paper and pen next to you, could be to just write down on your paper or send yourself an email right now, schedule time to do budgeting next year and do it. I want you to do it, start it in October. I'd like you to be doing your first draft of it in early November, and I want you to be done by this week or next week. Why? Because everybody goes brain dead the moment that the holidays get closer and closer. Okay, so if one of the best takeaways you could have is schedule time for next year to start your budget earlier, that would be fantastic. Okay. All right. So the budget for the year is going to have some of the same components that we talked about reviewing, but now what you're using is you're using the previous information in order to set the targets for the future year. So we're going to set revenue targets. We're going to set targets for what our COGS are, or variable expenses. And this is an estimate. You should know, and if you don't, maybe be something good to look into or learn about. You should know for every dollar that you charge your customer, how much money you leave with after you produce that thing. So for most of you that are in a service-based business, it's costing you somewhere between 40 and 50 cents per dollar in order to produce the thing that you do, leaving you somewhere between 50 and 60 cents. Okay. So we want you to be able to estimate what that looks like. Next thing is your fixed expenses. And I want you to think about, and look at what's happening with your rents, what's happening with your utilities, what's happening with your cost of insurance, what's happening with your payroll. These are all the things that we spend money on, whether we have one event or whether we have 1,000 events. Fixed expense stays the same, no matter how many projects it is that we do. So at the end, if you have all that information, it's what is that net profit? What is that target? So when you build a budget properly, you are pre-defining at the end of the year in 2026 that you are going to have a net profit of 15% or $100,000 or $1.5 million. Saying that and writing it on the wall is a very, very important step. One of the things that we're going to do is we're going to give you a template here in the program. It's the Mentor Pods budget template. And what I'm going to do is take a moment and put this inside the chat for you to save you some time. This is also in the download kit. You don't necessarily have to use this link right now. In fact, it might even be distracting. So I'd probably just stay with me and watch the screen. But the budget template makes it really easy to open and close all these sections, and all you have to do is fill it in, and it does the rest of the work for you, which is nice. And we've been told many times it's a lot easier than using some other templates that are out there or trying to use your budgeting tool in QuickBooks, which can sometimes get complicated. So it has all the sections that I just mentioned to you: revenues, variable expenses. It tells you what the gross profit is based on percentage, what your fixed expenses are, and then operating profit. And then it does this thing. It says, hey, at the end, if I have a certain amount of money, what am I going to do with that money? This is more about what ownership and leadership teams are going to do. This is where you say, are we going to distribute profit? Are we going to buy more gear for capital expenditure? How much money are we saving for taxes? Because your tax money doesn't show up in your profit and loss statement because you need profit to pay taxes. This tool helps you to do those things. If I explain these segments just one at a time for you, the annual budget tab for revenues, I'm going to recommend that you take every single thing that you do and add a separate line for it. If that's a little bit overwhelming for you, just put one giant number, just put the word revenue there, and just start entering numbers about what you're going to see on a monthly basis. Okay. Next thing is your variable expenses. If you know exactly how much it is that you pay, okay, you know how much revenue you're going to have, you can reverse calculate what your variable expenses are going to be. How much did you pay your staff? How much did you pay for supplies and materials? Was it maybe for food costs? Maybe it's fuel, maybe it's credit card fees, maybe you're paying commission. These are all the things that you put in your variable expenses, okay? Or you can just put a percentage in my spreadsheet and then just say, we generally spend 40% of what it is that we charge the customer and end up with that. That then auto calculates your gross profit, tells you how much you have left. And notice that here in this range, we're going somewhere between 60-ish% and in the mid 70s by average for this example business that's in here. And then if you're looking at fixed expenses, these are the things that don't go away, whether you've got one customer or 100. All right. That rent, that payroll, utilities, insurance, things of that nature. And as you can see, we do this conditional formatting so you can see what some of your largest expenses are. Why? Because if you're going to go negotiate some of those, that would be a great time to do that. All right. Then ultimately it shows you that operating profit, as I mentioned, and then deciding how are you going to spend that profit. You're going to give it to your employees. Are you going to have some owner distribution? You're going to go buy some more stuff, pay down some debt. You get to decide what you're going to be doing. Okay, so the annual budget template, again, for those that are either watching the video or with us today, is in the chat. It is in the slide deck, and it is a nice little tool. It's a nice compact tool. Pass it to your team, and it is part of the assets for you. All right, if you have any questions about what we're talking about regarding that end of year item, please put them in the chat, and we will continue to monitor. All right, your 2026 sales plan. For those that are with us, please put inside the chat. Do you have sales projections and sales goals for next year yet? Yes or no? Do you have sales goals and projections for next year yet? Yes or no? What do you have? Most of the time, unless you finished what you have in a previous year, we're going to see exactly what Isabel just said here, which is that sometimes, and a lot of times, people just say, I just want to do better than last year. So Isabel, I'll ask you another question and we'll go deeper on this. Isabel, are you on track to do better in 2025 than you did in 2024? And does the trend say that you will do better in 2026 than 25 without you doing it or changing anything? So are you already on track to do better in 26 is the question than you did in 25? If the answer is yes, then you don't have to work really hard at setting sales projections if all you're looking to do is just increase. But I want to challenge you because that's what we do. I think that you should set stretch goals and actually be very deliberate about setting sales targets on a monthly basis because you'll be surprised that when you put on a goal on the wall, that you will meet it and exceed it. That's what happens. That's how goals work. So, where do you even start? So, I want you to use last year's sales and I want you to check for consistent things and things happening with seasonality. And there's a giant note here at the bottom of this page. And you can read what you want, but ultimately just know we want you to look at the history of what's happening with your business. And I need you to remove outliers. Okay. So if you look at this chart, for instance, and if we had an event that was in, let's say, March or April, and it spiked and our revenue went up, and you can see based on our trend that we have a very, very specific rolling average of revenue. What I would do is I would say to the team, we really should remove that giant customer that came out of nowhere that we had in that off month. Okay. Or if you know that one of your clients only does something with you once every 2 years, don't forget to take the revenue out for the off year, right? So just remember, I want you to remove those outliers. For those that aren't using sophisticated sales systems, we recommend, even if you want to do it inside Google Sheets or something else, keep track in real time of what's happening with your sales team. We want to know how far are you through the month or through the year and where it is that you're going to get to if you stay on this current course. Because I don't want you to have your head in the sand. Ultimately, I just don't want to lie to ourselves about where it is and where we're trying to get to. Why is this in an end of the year playbook? Because now's the time to set up the first quarter of these charts for your sales team. That way, you don't have to scramble on January 15th and try and put it together. So I hope that you have these things in place. If you don't, reach out. We will help you. No cost. I'm saying we'll just send you whatever you need to get you started. Okay, so where do you even start? I just want you to know what's normal for your business and don't just jump straight to big goals. It's not a great place. You need to measure what's happened in the past in order to decide where you're trying to get to. So if you want the baby's first version of setting goals, take your current trajectory about whether you are up or down this year as a percentage, modify it just a little bit with how you're feeling about what's happening with your leads and your delivery and execution, and just multiply last year's sales numbers by that. So for some of you, unfortunately, this bottom note may be a real thing. And that's that 2025 beat up a lot of companies, all right, in different regions of the country. So I'm a big fan of slow and steady wins the race, unless you're going to have a giant injection of capital coming from something else. And I don't want you to spend all your money putting it back in the business. Not all of it. I want you to take away what you need to. Your number could be negative. So for some of you, I like a plan for 2026 that says, actually, we're going to ramp our revenue down. We're going to change how we operate. We're going to get more efficient, and we're going to make more money than we did in 25 with less revenue. That's still a win in my book, right? Okay. All right. So let's move on to this next section. If you have any questions about anything that we just talked about in terms of that budgeting category, please let us know. Hopefully that tool is helpful for you. Okay. You mentioned one big contract that is not consistent. There you go, Melody. We can't include it. We shouldn't. It's not a great idea to do that. Next category is going to be personal and business tax strategies. Some of this stuff's going to get a little bit nerdy, so fasten your seatbelt. I'll try and rip through it and get to some of the other bonus fun stuff that we included. So first and foremost, please, please, please meet with your CPA. If you do not have it on your calendar or your organization doesn't have it on the calendar right now to meet with your CPA in the next 2 or 3 weeks, now's the time to do that. Why does it have to happen immediately? Even if it's like a rush meeting after hours, because you need a couple weeks to do the things that they're going to ask you to do if you have to button some things up. All right. You're going to review those year-to-date financials, that talk about any tax liabilities that you haven't yet settled on, and you're going to talk about tax savings strategies. All right. Compliance is a huge deal. We got to make sure that we get a whole bunch of things filed and taken care of. These things aren't sexy. Nothing sexy about them. We just have to do them because if we don't, we end up having to pay the piper and penalties ultimately. So preparing for it, organize all that information, like we said earlier, having your W-2s so that you can be on time and compliant with your 1099s, super important. Contributions that you have to any of your retirement plans, doing those, depending on whether you're cash or accrual, this matters, but doing these inside the calendar year can be very, very important. We want to stick with that. Okay. All right, so some bonus items. I'd like you to set aside 5 or 10 blank checks. I hope that your CPA has told you this in the past. This is also a good thing for personal expenses. All right, so this isn't just business. Set aside 5 to 10 blank checks. Take them out of your checkbook, put them in an envelope, and put a little note on it. Because if in the middle of January or February you're having a strategy meeting with your CPA and they say, "Man, I really wish we would have spent some money on blank." If it's the right type of vendor that understands how the game is played, you can backdate a check and then basically roll that back and be completely compliant when it comes to what happens. So just know it's a great thing. It'll allow you to backdate it if you choose to. All right, so to review that, we're recommending that you meet with that CPA, review things with them, talk about any investments that you're going to have based on your positioning, and keep those blank checks on hand. Now, some bonus items. In the chat, can you guys tell me, do you guys own homes? Can you tell me, do you own a home? Yes, yes. Okay, for the two of you that have answered so far, and for those playing along at home, now think of, if you do own a home, do you know what the Augusta rule is? Can you tell me that, Isabel and Kristen? Do you know what the Augusta rule is? Have you used it in the past to your advantage? You do not? Okay, understood. This is going to be maybe a good takeaway for you then. The Augusta rule states that anybody who owns a house, and you don't have to be a business owner in order to take advantage of this rule. It means that you can accept revenue from a business for the use and rental of your home, and all of the revenue that comes from it is completely tax-free for what's happening. So the way that this works when you're a business owner and you have a business, hopefully it's an LLC and you have an entity filing, is that you can now say that you're going to have a retreat. Okay, and this is all on paper, by the way. Talk to your CPA about it. You can pay yourself for the rental of your home, separate than your office use. And for most people, this is somewhere between $15,000 and $24,000 per year, depending on the region of the year, the country they live in. They're like high-end VRBO and Airbnb rates is kind of what you're targeting. So this is a great little note. Put this on your list to talk to your CPA about. You can save yourself somewhere between $4,000 and $6,000 in taxes just by taking advantage of the Augusta rule. But you have to do it in the tax year you're working with. So you need to do that in December. That's why it's in this deck. Paying your kids. Please tell me in the chat. Do you guys have children? If so, how old are they? Put that in the chat for me. If you have kids, and I suppose it also matters whether you're in ownership and you have the business. But if you have kids, tell me in the chat and whatnot. Anybody who has kids can basically, through a completely legal loophole in tax code, put your children on payroll, whether it's payroll or it's a contractor, for up to about $15,000 in this given tax year. And the way it works is, even if that person is 3 or 5 or 10 years old, you say, this person helps us sweep the floor and I pay them. This person browses the internet and looks for ads for me. This person is a model in some of our research and development experimental marketing campaigns for the business. And I'm just telling you, I have never encountered a business owner that hasn't had an audit issue with putting their children on payroll. Okay, basically, so if you make $100,000 a year, you pay yourself 80 instead of 100, and then pay two of your children $10,000 each. It is a great way because none of that money to them until they get to a certain point is taxable. So just putting it out there. This would be a great thing. You have a niece and nephew. Can it apply? It cannot apply in the same way unless that niece and nephew is going to take that money, put it in their account, and then give it back to you. Some people do this with elderly parents that are below the rates of a different tax bracket. So if hypothetically you wanted to give an elderly parent the money, and then that parent would put the money in their account and then they would make your gas bill for you. They would pay that bill or they would pay your electric bill. That's a way to get it out. But you only can do this with people that you trust and that are going to give the money back to you. Okay. So basically, what happens is with your kids, you put it in the account and then you basically draw upon it for living expenses, which works out. Okay, next item, prepaying next year's expenses. What I want you to do is to take time to think about if I've got a little bit of cash left over, what could I do to minimize my tax burden? Like if you legit have $50,000 sitting, I'm not telling you that you should just go spend the money so you don't have to pay taxes. I like profit. I want you to put it in your account. But if you weren't going to take it out in the business and you were going to spend it anyways on a contractor, you were going to do a new website, you need a new case of a certain material. Let's say you're a photo booth operator and you needed a new case of photo paper, or if you're a photographer, you wanted to buy that new iMac and you planned on it that it was going to be coming up. Maybe as a venue, you were going to buy the chair pads that you were waiting on, but you planned on it in Q1. If you have the cash right now, you can minimize the tax burden of the 2025 year by advancing and prepaying some of those. And contractors love this. Contractors love hearing, hey, I know I pay you about, $5,000 a month. Could I pay you like 20 grand and get a little, maybe a 10% discount on that? They love that. So there you go. Section 179 and depreciation. I'm going to skip past these couple slides. This is just to say that bonus depreciation and your ability to write off all of expenses when it comes to equipment and things that are large equipment for your business. This is a decision for you to make with your CPA until you're very, very clear in the understanding. But why is it in this deck? Because you have to do it now. You got to make these choices because you can't wake up on January 1st and wish that you had accelerated the depreciation on a thing that you bought 2 years ago or that you bought this year. All right. I'm going to jump past that. Retirement contributions. You still have a little bit of time in order to fully fund something for yourself or for your employees. So if you want to do that, or if you want to make contributions to their things like 401ks and other items, now is the time to make those moves. Remember, there's only a few things we can do with profit, and paying people bonuses is one of those things. And whether it's for your benefit or theirs, the retirement contributions really get there for you. COVID did a great thing for one area of business, and it is that it took the normalization of home and office deductions and made it completely normalized for everything that was happening. So whereas some CPAs used to say it was a little bit of a gray area, have this conversation with your tax team and take whatever is the most beneficial for you. But we should be writing off whether you're an owner, whether you're an employee, doesn't matter. There are portions of your home that you can write off to the max in order to save yourself some money. So look into it. Mileage in auto is another piece of low-hanging fruit here. Whether it is that you are not consistent with this or you haven't yet chosen your method, we want you to be tracking your mileage or your actual expenses associated with a vehicle that you drive for work. And that is to say, the only thing that's not on that sheet is I also want you to know that if you do choose to have that car payment or whatever it is, because it is a sole payment for the business, you have to decide whether it's being financed or not, or whether you're just borrowing it from one other thing. But a lease payment is a 100% write-off with no questions asked. Other things are not. So if you're trying to accelerate something, just be cautious that you understand what the rules are. If you have any questions, let me know. Okay, so far so good. We're looking good on timing. All right, action planning for success. This is the part where strategic planning comes into play. And once you check the boxes on all the things that we just talked about before, which are meat and potatoes, like, oh my gosh, I should talk to my CPA, I should probably build a budget, I should talk about my sales goals, and I should make sure I'm good for taxes, right? Those, to me, things, those are like very logical. I want to make that happen. This is something that if your business is great, maybe you don't have to do, but you should. Okay. Let's set goals for next year, create or revise that business plan and put it in place. I want those goals to be smart. They have to be specific, measurable, attainable, or achievable. They have to be realistic, and we have to have a deadline on them. So if you have something on the wall and it doesn't have all of those components of smart because it's not specific enough and it doesn't have a deadline, it's just a dream in disguise. Okay. I want you to be very, very specific about the goals that you set. Goals aren't just financial. Some of them are operational. Some of them have to do with something that you're experimenting with. All right. The sales goals are super important. I've included inside the download kit for you today, sort of a 101 baby's first version of setting goal setting better for yourself. The reason that we're doing this instead of giving you a full strategic planning overwhelming packet is if you understand how to set goals really well, you can do it for every part of your business and you won't get paralyzed with analysis paralysis. So check that out. If you're not great at goal setting, this would be a great time for you to look at it. All right, we got a little bit of time to get through some of the bonus items that I put inside this deck for you. Let's talk about your team members and team management. So employees and team management. This is a great time, and I'm going to put all of these up on the screen for you, and I'm going to talk through them. It's a great time to update the information. And some of it you could say is part of like the W-2 and the 1099 thing. But what I'm saying is get all the right personal information so that you can clear your conscience and like get it off your list. Like I want to have that weight removed from the shoulders. I want to have everything done properly. And also ask for the feedback about what's been happening with your business. I like three questions in an email. What went great this year? What didn't go great this year? What else do we need to know? What else do you want to talk about? And if you're willing to have real, authentic conversations with your team members, you will set yourself up better for 2026 than you had in 2025. But you got to be ready. You have to be ready for the answer. One of the rules I live by is never ask a question that you're not ready to hear the answer to. So if you're not ready to hear the answer to the good, the bad, and the ugly, don't ask it. That would be bad. All right, next page on this stuff is I want you to think through what it looks like. Have you done the performance evaluations that you need to? When is the right time to get off on the right foot with everybody? Are you doing something as a give back with your team? Are you planning some sort of holiday celebration? Are you giving the holiday bonuses and other items? Do you have a training plan to see the difference between the skills that they have now versus the skills that they need? It's a great time before the holidays and before everybody goes brain dead on it. It's a great time to let everybody sort of reset so that when they come back on day one, they're ready for better versus coming back on day one, having some brain fog, and then start to talk about how we can be better. It's not a great way to start the year. It's a great way to start a year if you already have the plan. Okay. So, Christmas bonuses and year end bonuses. I put this in the deck because it's my experience that it's a very stressful thing. If you've ever seen, and for those watching the recording with us today, if you've ever seen National Lampoon's Christmas Vacation, there's a ton of stress and lots of jokes around the idea that the guy was expecting a giant check and he was going to put a pool in with it and whatnot. So if you're going to do holiday bonuses, I highly recommend that you do it in the first week, if not the week or two, really the first week of December. That way nobody is wondering and trying to budget for what's happening with their holiday bonuses. There are people that work with and for you that are budgeting that a bonus that you give them annually is what they use to buy Christmas or Hanukkah presents or something that they do, or they fund their retirement with it. All right. So review those things and make sure that you know when you're going to give those holiday bonuses out. And by the way, footnote, you should be budgeting for it in your budget. You should be putting in your 2026 budget right now that you are giving away X% of profit or $2,500 split amongst 18 people, whatever it's going to be, you should be budgeting for it. I mentioned this earlier, but I want to mention that because it affects everybody, now's the time to audit what's happening for your insurance. This goes for auto insurance, it goes for health insurance, it goes for all the different things. Last year, my customers saw an average increase of 18% for healthcare, and this year we're looking at 24, 25 average. That's a giant number. Everybody needs communication because they need to hear it from you. That way, it's not a surprise because it's hard. It's hard to work with it. Some other bonus items that are on here have to do with employee handbook. Now's a great time again. Policies, it is hard to break and bridge a policy over a calendar year. So if you have a major policy that you've been looking to implement or change, right? It's a great time to lock that in, communicate about it, let everybody come back on day one and be ready to hit the ground. All right. So here's the review of the things that we just mentioned here, having to do with team and employee management. All right, marketing and client engagement. So I want you to be doing all the things that it takes to make sure your customers know that you are very, very happy. Now, number one, great book, Good to Great by Jim Collins. There's a concept in there called the flywheel. The number one thing that every single person on this call and watching the recording has to know is you have to do a good job. And if you do a good job, people refer you. And if people refer you, then you can do all the things that you need to in order to be really productive. And if you are, you're profitable. And if you're profitable, you can hire the best people, the very best people, and keep them. And if you have the very best people, you're going to do a good job. And the cycle continues. That's called a flywheel. So everything having to do with marketing here leans into that. I want you to be saying thank you at the right times of the year, not just during the holidays, but it's a great time to do it. And I want you to review your marketing ROI. And just like with your team members, I want you to ask your clients, how can we be better, and be asking for feedback. And certainly, it's a great time to ask for reviews also, but I hope you have a system at this point that does all of that. So one of you mentioned ROI in the top, and I can't scroll up fast enough to get to it. Who said ROI?
I believe it was Melody.
Perfect. So Melody, you said ROI, and I don't know if you love spreadsheets or whether they make you nervous, but I want you to know exactly what you have going on within your ROI for your marketing. This is something that we should be looking at quarterly at a minimum, but definitely at the end of the year. Why? Because I want you to know exactly that every single initiative that you have within your marketing segmentation, I want you to be able to tell me what is the ROI for that. I want you to know how many dollars you spend per lead, how many dollars it costs you to close a deal, and I want you to know what your conversion rate is for all of those. So now's a great time to do that. This tool would be available. I'm not sure if it's in the download pack, but if you like what you see, shoot me an email and I'll put my thing up at the end again. I'm happy to give you the 10x marketing matrix, no cost at all. Okay, so doing year-end sales or promotions, you're right up against the deadline on that. I would say probably even the ship may have sailed without you looking desperate, but it's never too late to try. Now would be a great time to be looking at whatever promotions you're going to start running in the first quarter. But any changes that you're going to make on the website, now's a great way to talk to your people. But most people forget to change the copyright if it's not dynamically coded on your website and to test some things. This is a gentle reminder if you're not using an uptime monitor, which is a service that you pay just a couple bucks a month to, that checks your website every minute, and then it emails or texts you and said, "Hey, be careful, your website's down for some reason, or your contact form just broke." You don't want to go a month and realize that your contact form, some WordPress plugin broke it or whatever else is happening. Okay, last one, and it's much less exciting. Operations and compliance. When you're working on all the things in other areas of the business, I'm going to challenge you to think about the departments of your business as businesses amongst themselves. So the financial department should have its own scorecard. The sales department should have its own scorecard, the marketing department, and so on. So inside the deck, there's going to be a link to this, and you'll have the ability to download all of the MentorPod scorecards if you choose to use them. We're giving them away as a bonus for everybody here today. We hope that you enjoy them. Okay. There's a couple other things here that have to do with inventory control. And if you're a rental company and other things, some of these things could be very, very helpful to you. But at this point, it is about 12:45, and I'm about 2 slides away from what was my last slide to begin with. So I'm going to ask you guys as I exit the screen share for just a moment, what questions do you have? I'm going to challenge you to put those questions inside the chat right now while I'm teeing up one of the other things that I want to show you guys. And let me know what questions do you guys have so far, and I will do my best to answer them for you. While you're doing that and posting those questions, I want to review this slide that I made for you for personal. I really want you to not just think in terms of business. The business, whether you are in ownership, leadership, or you are a team member, the business or what it is that you do professionally in your life is there to serve you. So I want you to reflect on what's happening for your own personal development and growth strategy. That way you can make the business work for you, or you can make your job work to serve your life. Second thing is, now's a great time to plan for vacation or downtime. Some people say if you don't plan the vacation, it won't happen. I firmly believe that. Now's a great time to plan that. So I just wanted to point that out, that it's great to have that personal time. Also a great time to schedule those doctor's appointments, dentist appointments, and any personal gifting budgeting that you want to see happen. All right, I see the Q&A. Let's go over to here. First question is, I've been hearing that S Corp is better than LLC, but I'm happy being an LLC. I know I could ask my CPA. Yes, I have some input for you on this. First thing is that this is one of the most widely misunderstood topics, and you're actually even going to hear this answer, in my opinion, this is a strong word, wrong from some CPAs, which is wild to me. An LLC is an entity. It's a legally registered item, okay, where you get an EIN if you're choosing not to use your social security number and whatnot. An S corp is actually not an entity. So when people say, "Do you have an S corp or are you an S corp?" That's actually not correct. What an S election is, an S corp is a tax filing status where you take an LLC or any entity and you choose to file its taxes with what's called an S election. So the question is not should I be an S corp or not? The question is, do you meet the requirements of an S election for your taxes benefiting you? That's the question you want to stick to. So the answer would say, and it's a very, very generic general answer, if the money moving into someone's personal life is somewhere between about 120 and $150,000, it may be time to have the discussion with your CPA about electing to have an S election. Now, once you do that, there's a number of things that change for how it is that you can do certain expenses and you get taxed at different rates. Bonus depreciation is going away. You can have your CPA explain that to you, but Section 179 is still a thing, at least for now. So, um, the long and short of it is that it is definitely better for you to elect to pay your taxes at filing S corp as long as you meet the requirements of what it's going to be. If you do not, because you make under that amount, you'll actually pay more money in certain ways. So it does not work out for everybody. A different way to say it is the juice wouldn't be worth the squeeze. Okay. So if Isabel, you have any more questions about that, I'm happy to help you. But yeah, you really just have to make a decision whether you want to file, and it's possible, but it's actually a pretty big audit flag. What I mean by audit flag is if you do a certain thing that causes the IRS to look at you, that's bad. So if your expense categories are way outside the industry norm for your business, you're probably going to get audited, right? One of the things that's a major audit flag is trying to switch mid-year to an S election. So now's a great time to have a conversation with your CPA and say, have we missed the bus for 25? Probably. If not, what are we doing for 2026? Are we going to plan on an S election for 2026? Good question.
That's awesome, Matt. We do have a previous question here from Melody. She is asking, do you have resources for financial projections?
Yes. Financial projections should be based on the previous year's information. So all of you that have a profit and loss statement, that's the first resource that I want you to stick with. Okay. So the budgeting tool that's inside the system is a way to get it on paper for yourself. But what I want you to do is to simply just take January, February, March, April, May, all the way through the year, and I want you to put 2026's revenue there. And then I want you to ask yourself, are we up or are we down over where we were this time last year? And if you're up, then add a couple percent, add a couple 5, 10%, whatever it's going to be. If you're down, be honest with yourself. Say leads are down. The market is changing. I've got a competitor that's on my tail for whatever it is. You might need to take this year's numbers and notch it down by 10%. And why would we do that? Why would I ever accept defeat? It's not defeat. If you budget for being 10% higher in revenue than you're actually going to be, and then you budget to have a 401k and to do a bunch of other things, you're going to run out of money. You don't have enough money inside the budget in order to facilitate the budget. So the resources in order to create the financial projections, there's active ones and there's passive ones. We've got a couple tools that we use, and the financial scorecard could be helpful for this, but um, I gotta say, I don't like it when pros are like, hey, you should go ask ChatGPT. We're foolish not to at this point. Okay. Take your profit and loss statement, your balance sheet, and your statement of cash flows, download them, and inside QuickBooks, change the sorting of the information to show columns as months. Okay. So let me review that for those in the back. Go to QuickBooks, go to standard reports, go to profit and loss. In the upper right, there's a button that says display, and in it, I want you to say time periods, and I want you to select months. What it's going to do is it's going to show you every month over the course of the year that you have in the date range. And when you download that as a PDF and send that to ChatGPT and say, please set my sales targets for 2026, but ask me questions before you set them, it's going to say something like, how's your business doing? Are you up? Are you down? Did you have any outliers? It knows that because that's what sales consultants will do with you. So that's the ultimate goal. Use a language model like ChatGPT, use the budgeting tool that I've given you, or use a napkin and just go to town. Any goal, even if it's wrong, is better than no goal at all. Okay. But the projections, what you're really trying to get to ultimately is what's your projection for net profit? Because none of the rest of it matters to me. We need to get down to the profit. We need to be profitable. What's the point of the business existing? That was a long answer.
No,
Thanks for
I
your
love
question.
it. That's
Okay.
awesome. Melody, let us know if you have any follow-up questions to that. We do have a couple more minutes if anybody has any other questions. If not, make sure, Matt, if you have a slide with all your info, I know you put it on the chat, but for those that are on the replay, where they can follow you, your website, all the things.
There you go. So there's that QR code one more time.
Awesome.
And you've got some contact info. I have a couple additional slides that I have on standby based on some of the conversation we had today.
Yeah.
Um, there's there's just so many things to look at, and I understand, guys, in if if all of you are in Florida, I know that busy season is a real thing, and to you, it's like for us, being in October or July in Cleveland. Like, I don't want to think about bettering my business in the middle of trying to do 50 events in a month, right? And by the way, I skipped that part. My company used to do about 1,500 events per year, and it had a number of companies that I wrapped up together and I sold it. So I am an event pro for everything. I know that this is not the great best time of the year to be trying to do strategy for what's happening for your business. But you only get one shot at not crossing the threshold into 2026. So what you have to do is the CPA, the tax, the this, the that. But some of the other strategic planning, February might be your go-to, right? So, look me up if that's the time to look at it. Check this out. So you're seeing my whole screen. Can you see the new window that I just popped up there, Nicole?
Yes. Yep.
Okay. So this chart I wanted to share. I thought of it when we were talking. This is a fascinating statistic that came out of a sample set we did of event companies. So the blue line represents how much business this company can take, and the other lines that are on here represent basically their closing ratio and how busy they are. And what I'm pointing out is that there's a certain time of the year when you wouldn't even notice that at your busiest time for some of the businesses with us on the call, they don't even realize that when they're busy in December and in January, their closing ratio drops by 12% and they never even notice it.
Hmm.
So it's busy at the very same time as they're doing sales cycles things, but what they're doing is they're stepping over a dollar to pick up a dime. In other business books, it's like, are you ever too busy cutting down trees to sharpen your axe or sharpen your chainsaw? Yeah, that's a real thing. We have to stop and work on the business sometimes rather than in the business. So I want you to think through that. What happens when you get busy to your closing ratio? What happens when you get busy to certain other things? And if you look at the data, you'll see it. It'll jump right off the page at you. So, all
Yeah,
right.
Melody just mentioned that she's seen that too, that we spend more when we're making more. So,
Yeah, it's wild. Your gross margin percentage is actually inverse to what you think it should be. So when an event company gets slower, our gross margin percentage drops. And when we get busier, it usually goes up. Now, the thing that Melody said matches that, but here's the thing we don't assume. A bunch of companies will normally say, well, we need to be doing more business in the off months. See, that's a little bit of a fallacy there. Yes, we want to be busier when our facility is dormant or when we're not doing business. But the first thing we should be focusing on is doing more business when we're busy because we are more profitable when we are busy because we've already achieved break even and we know we have more customers in that time frame. So I'm not talking about pushing yourself past your max and doing a bad job. I'm saying that rather than always looking for the business that's found money in the other off months, find ways to be busier in your busy time because that's where your profit comes from. All right. And then you can also still breathe and take a break during the off season because the cycle is healthy at some point.
yeah. I love that. Well, if we don't have any more questions, thank you so much, everybody, for their time. Thank you, Matt, for your expertise. It was amazing. I will make sure that we share how you can connect with Matt, and I appreciate your time today.
Let me just say one more thing. This
Yeah.
thing that we do is called Mentor Pods. We get 24 businesses together every year, and we work with you every single week. This program that we do has been around for almost 4 years now. We would love to have a conversation with you if you or your team would benefit from weekly coaching, weekly cheerleading, weekly accountability, and learning lessons like the one that we gave you today every single week. And we work with your whole team. You want us to work with your marketing manager, with your bookkeeper, with whoever. They're all included for free as part of the program. Just want to let you know we're extending a savings. We're saving $1,200 for you if you guys join based on the referral coming from Wedding Venue Map. So if you just mention it, I'll give you $100 off a month of what it is that we do. Our program for your price would be about $650 a month. If we raise that price $100 every 6 months. That's how we think. But anyways, I just want to tell you guys we're offering a special for you. But I appreciate the time and the opportunity to work with you. Thank you so much, and I hope to hear from you guys soon.